let's test your tax knowledge. What are the different types of taxes? Well, we've got bad, we've got the not good ones, we've got the terrible ones, the rotten ones. And of course, the answer is all of the above. So that's a little tax humor for you. I'm here all tax season, and don't forget to tip your tax preparer. But really, what are the different types of taxes? Well, I hope you're sitting because there are quite a few. There's the federal income tax, state and/or local income tax, unemployment tax, sales tax, foreign tax, value-added tax, estate taxes, capital gains taxes, property tax, excise taxes, luxury taxes, corporate tax, GST tax, carbon tax, windfall tax, Medicare tax, Social Security tax, alcohol gas tax, and many others. It is taxing to talk about the many types of tax. That line kills with CPAs. All right, I'm going to talk to you about all the rules for each of these different taxes. All right, no, I'm just kidding. That would be ridiculous. You don't need to know the rules for each of these, but we're going to hit on a few of the big ones. But first, let's group them into categories so we can better understand them. Almost any tax can fit into one of the following 4 buckets, and here they are. The first category of taxes are the make-it taxes. And the first example is the income tax. So you're probably already familiar with this one. If you make an income from a job, from selling lemonade through your business, or from making money from other sources, you might experience an income tax. Second one are payroll taxes. These are taxes you pay usually from your paycheck for Social Security and Medicare. The next are investment taxes on money that you make. If your investments make money, and let's hope they do, you may have to pay tax on the gains. For example, if you earn interest or you get rent from someone renting your house, well, that's taxed. If you sell an investment for more than you bought it for, that's taxed also and is called do you remember? Capital gains tax. Taxes such as the income tax, payroll tax, and capital gains taxes on the income your investments make all fit nicely into this bucket. It's like when you open a can of tuna and your cat and all the cats in the neighborhood come running from out of nowhere. If you make money, the government perks up and gets very interested. Second category are the taxes when you spend it. So let's try to get this straight. The government wants a piece if you make it, and now they want a piece when you spend it? 3 letters. Y-U-P. Yep. The most common type of spend it tax is, you're probably already aware of it, the sales tax. You buy a box of multi-grain steel coat. Oh, who am I kidding? You reach for the box of Fruit Loops with fruity-shaped marshmallows for $3.99, but end up paying somehow $4.25. That extra 26 cents is sales tax. Sales tax is determined by the state and city where you buy the goods. Some cities and states don't have any sales tax. Shout out to Portland, Oregon. And others do. Shout out to Birmingham, Alabama, with a sales tax of 10%. Ouch. All right. When you fill up your gas tank, chances are the price per gallon you pay at the pump includes a bunch of taxes. If you buy booze or cigarettes, again, chances are the price includes a lot of taxes. The third category, own it taxes. If you own property like land or a house, then you will most likely have to pay property tax. Fortunately, property here doesn't include your stocks and bonds. When I say property, I'm really talking about real property, houses, buildings, and the like. The next category of tax are the give it taxes. So many years ago, when I was learning about taxes, I really just didn't understand this one. My professor said, if you give money to someone, you might have to pay a tax. Like, what? How could this be possible? If I give money to a friend, then I might have to pay tax? How does that even make any sense? Well, sense or no sense, it's called the estate and gift tax. If you give too much money away while you're alive, you will have to pay a gift tax. If you give away too much money after you die, it's called an estate tax. And if I were a wittier person, I'd be able to come up with a funny quip related to the old saying, the only things that are certain in life are death and taxes. But alas, I'm not so witty, and so I won't even try. So make too much, spend too much, own too much, or give away too much, and you will most likely have to pay tax. But what's the alternative? Don't make very much, don't spend very much, don't own very much, and don't give away very much? That doesn't sound very good. Or maybe, just maybe, there's another way to reduce the taxes you pay. Should stay tuned.